Welcome to QB Power Hour. Today's topics are tax planning tips with QuickBooks and Tax Planner Pro. Today is December 10th, 2015, 12 p.m. Eastern. About QB Power Hour, we are a webinar series, usually every other week on a Thursday at 12 p.m. Eastern. The next episodes are going to be next week, December 17th. We're going to cover top QuickBooks apps for 2015, top 10 QuickBooks apps for 2015. Don't miss that episode. That's going to be a great one. And then the next regularly scheduled episode will be on January 14th. So we'll be off on a break for about 30 days or so. And we're probably going to cover some sort of year end or payroll topic. We're still kind of working on that specific topic. Now, between next week, December 17th and January 14th, we may have at least one bonus episode. We don't have a date yet, so you'll get an email if you're subscribed to our webinar series about it. And I just don't think we can go a whole 30 days without doing another episode. Anyway, we typically cover tips and tricks and some advanced insights on different topics every other week. Most of it is 50% QuickBooks Desktop. Sometimes it's a little bit more skewed towards QuickBooks Desktop or QuickBooks Online, but we typically like to do 50-50. And every once in a while, we have special guests like we have today that will cover a third-party app and maybe some practice management tips and anything related to small business and accounting industry. Now, the agenda is about QB Power Hour, the host and guest. We'll talk about the CPA process, some announcements and updates. And basically, we're going to cover introductions for the first 5 minutes. Then I will cover the new QuickBooks Online Accountant trial balance feature. That will be about 10 or 15 minutes. Then Christopher Ragain, as a tax planner expert, he's going to cover some obscure and must-know tax tips. I'll guarantee you're going to love them. That'll be about another 15 minutes or so. And then he will do a demonstration of the application that he uses for tax planning called Tax Planner Pro. That may be 10 or 15 minutes. And then we'll just wrap it up with some questions to Chris and then do the CPA polling at the end. Now, Michelle Long cannot be with us today. Poor her. She's in Hawaii. So, I feel so bad that she couldn't make it today. She's actually with Intuit doing a QuickBooks Online training certification in Hawaii. So, hope she's having a good time there. I'm Hector Garcia. I live and work in Miami, Florida. I'm a partner at QuickBooks Keeping, the name of our firm. We do QuickBooks training and QuickBooks consulting primarily. And very excited to be here teaching these webinars here today and always. Sponsors and guests, Michelle Long and her company and QuickBooks Keeping, myself, we are the primary sponsors. We are not associated with Intuit in any form or way. We do talk about Intuit related topics and QuickBooks related topics, but they're not sponsors or affiliated with us in any way. And also we bring third-party developers and other speakers that are outside, obviously Michelle Long and I, and we invite them over to talk about their products and talk about some tips that we think they're related to the industry. Anyway, the CPA process, if you need CPE, you must be on the webinar for at least 50 minutes or more. We're going to provide a CPE keyword at the very beginning. You have to write it down somewhere or remember it. And then towards the end, we're going to ask you a question and you have to answer that correctly. And if you do, you're going to get your CPE certificate. Upcoming live and web events. So in January, Intuit is doing the last leg of their National QuickBooks Online Certification Tour. There will be training on the first week of January in Jacksonville, Orlando, and Miami. And Michelle Long and myself are going to be at those. But if you go to intuitacademy.com, you can see the other locations with other trainers. Now, towards the middle of January, January 13th and the 14th, Intuit's going to have a virtual conference. It's called the QuickBooks Virtual Conference. And it's all web-based, and there's topics like QBO Cert Prep, there's QuickBooks to QuickBooks Online conversions, some year-end QuickBooks Desktop and QuickBooks Online tips. Both Michelle and I are teaching different courses during that session, during that virtual conference, so check it out. And then after tax season, there's going to be a live event that we have every year called Scaling New Heights. This year will be in Bahamas, so don't miss it. It should be great. Go to woodardevents.com for that. All right, so I'm going to start by talking about the trial balance, and let me just do a couple of bullet points first. First, the new QuickBooks Online trial balance feature, and don't get that confused with the trial balance report. You do have a trial balance report, we're talking about a feature by itself called trial balance. And so far is the best workflow tool we have inside QuickBooks Online Accountant to manage year-end adjustments and closing. So it's going to be really great this tax season that we have a single place to do all that workflow. Now it's very similar to the working trial balance feature that's on QuickBooks Desktop Accountant or QuickBooks Accountant under the client data review. So if you are using QuickBooks Accountant Edition and you've been using the working trial balance feature, it's going to be very, very similar. Now, what's really neat about it is I can add notes and attach related work papers per account. So basically the workflow is we review account by account and we add notes and attachments to that as we go through the review session of doing a year-end adjustment of the books or something like that. And then it can also do tax line mapping. That's probably the most exciting part about it, because with tax line mapping, similar to QuickBooks Desktop, whenever you had a QuickBooks Desktop export to TurboTax or export to Pro Series, very similar to that, I can assign a line on the tax return to every single account in the trial balance. That way, when I export it into a tax online or Lacert, it takes it right in and you have to do no data entry basically. So, sorry, for tax preparers, that's going to be very, very great. And it can also just export a generic Excel or CSV file. Okay, let me go ahead and demonstrate the new trial balance, which is a feature that's only available in QuickBooks Online Accountant. And you have QuickBooks Online Accountant because you see the big green bar in the top, and you see the word accountant next to the QB logo on the top left. So when you're logged into QuickBooks Online Accountant, you go ahead and select your client. And then in the screen here, you're going to see the word trial balance in the right, on the bottom right. And you can click on Start Review or Continue Review, because in this particular case, I already started my review. Some of the components to look at here is here in the top left, you're going to see the word trial balance there, letting you know that you're inside that function. And then it tells you what year you're reviewing. So in this particular case, we're reviewing 2014. And if I click on the little pencil, I get to choose which is the tax form. And we'll talk about tax forms later on. Tax forms to model after whenever setting up an export or mapping the accounts. Here on the right, actually on the top, you're going to see every change that was made either by the client or the accountant that is past the review period. That way you'll know whether there are changes being made before you're actually completing the financial statements or doing the tax return. Now here in the core of the functionality here for trial balance is going to be each account from your chart of accounts with a type and unadjusted balances and the activity for the year. And then as you scroll a little bit to the right, you're going to see adjusted entries, and I'm going to show you adjusting entries in a second. And then all the way to the right is the adjusted balances, which is finally what will post into your final financial statements or your tax return if that's what you're using this for. Now here on the very first column, you get a check mark. So kind of as you verify each balance, like for example, I went to my bank account, I verified that dollar amount was the right dollar amount. So I'm going to go ahead and put a check mark on that. That lets me and the rest of the people in my firm know that that account has been checked. It's good to go. We've been given the green light. Here all the way to the right where it says work papers, I can actually click on that little paper icon there, and I can actually write something like I checked the bank statement, right? Yeah, I could put here as of 12, 31, 14, whatever I want to put. So I can add little notes in there, and it will keep kind of track of who wrote the last note. And then there on the paperclip column, I can click on that and I can actually upload the statement or upload a spreadsheet or a scanned document or an email confirmation from a client or whatever. So the idea is that I kind of go account by account, and I have a place where I can measure my workflow. I know where I stand on this finishing the financial statements and doing the trial balance, and finally probably giving this information to tax preparer or preparing the tax return myself. Now, the adjusting entries are reserved for journal entries that are made by the accountant. So for example, let's say I'm looking at this particular account here, loan from personal 160, and my client tells me, no, I don't have any actual loans. Just make that distribution or contribution, whatever. So let me go ahead and make a journal entry to adjust that so you can actually see what happens. I'm going to click on Add Journal Entry. And this is a regular plain vanilla journal entry, just like it is on a regular QuickBooks circumstance. However, as I set up the journal entry here, so the only difference between an adjusting journal entry and a regular journal entry is that it would have that little check mark up here on the top. So I have to make sure that I mark this is adjusting entry. And then once I mark that, QuickBooks Online knows that every single adjustment under this category, and let me go ahead and put the dollar amount there, that every single adjustment in this category, it's going to go into that column of adjusted journal entries, and then you can actually track those events differently. So when I go ahead and see loan from personal distribution and I go all the way down to this column, I can see the debit and the credit under adjusting entry, and that's finally how it's going to figure out what the total adjusted balance is. So we wanted that number to be 0, and so it started at 160 based on everything the client did in QuickBooks Online. Then we did an adjusting entry, and then ended up in 0, right? So that's kind of like the purpose, is that you have a sort of clean, a single page way you can review all your accounts. Now, a couple other tricks here. I like to collapse this little top bar there. That way I get a little bit more real estate. And then when I scroll all the way to the right and left, let me hit cancel there. When I hit all the way right and left, I kind of lose a little bit of vision. So one of the things I can do to not lose that much vision is I can hit a control plus or control or command plus control minus in the browser, and I can kind of zoom in and out so I can get a little bit more space. So unfortunately, because there's so many columns that we're dealing with, you may have to play with the zoom until you actually get a full visual of what you're trying to do. All right, so that's the purpose of the trial balance, really. That's really all it is, a pretty simple tool. Now, the next step is, let's talk about tax returns. So let's say I am a tax preparer, or I'm preparing this for a tax preparer. Let me go ahead and collapse the left column there. That way I get a little bit more real estate. And then I'll zoom this in. And then if I'm going to export this into tax software, first thing I want to do is make sure that the tax mappings are right. So when I click on tax mapping, QuickBooks actually did most of the work for me. It actually recognized a lot of these accounts that were set up from the beginning, and it put it into the line item in the tax return. And basically where that comes from is tax form 1065. So if you click on the little pencil up there and you happen to be doing tax mapping for a corporation or something like that, that's going to have a different line item, and QuickBooks will do all that work for you. And then any accounts that are left unassigned, they're going to be put here under the unmapped category, and then you actually have to go in there and click on assign tax line and say, well, that's job, labor, income. That's going to be line. Let me go down to the cost of goods sold category, and then I go find the cost of goods sold category. There it is, and I assign it. And then once I'm done assigning all of them, the software, the trial balance in QuickBooks Online will actually export a really clean spreadsheet that you can import into most tax programs. So I'm going to go ahead and click on export tax mappings and click on export to CSV, so kind of show you how this will work. So I open up the CSV file here, and we see one column. It's for the descriptive sort of target in the tax return. It's telling you what line it's going to go to, what category. It gives you here the balance. All the balances are going to show as positive for debits and credits. So if you see a negative balance, it's just the opposite of the natural polarity of that account. And then under account, you actually get the actual account's name from your chart of accounts, and then the major type, which is an important component of understanding where all these things go. So most larger tax software packages like Lacert, Pro Series, CS Tax, Ultra Tax, all those softwares have the ability for you to import from a spreadsheet into the software, the trial balance. That way you don't have to manually enter all these things by hand. But even if you had to manually enter these things by hand in a tax software that doesn't import, I think it's very nice to have a worksheet where you can organize them, and you can export them into Excel spreadsheet that kind of guides you to the tax preparation process. So it should be a lot easier for large firms to communicate financial statements and trial balances from QuickBooks Online using the trial balance tool instead of just a traditional P&L and balance sheet printout. So that is a trial balance for QuickBooks Online Accountant. And then as Intuit adds more functionality to this tool, which I'm very excited about, especially this coming tax season, I'm going to create more videos and kind of show you where all those things are. I hope you like the trial balance feature. I think it's great. I think by the end of the year, or right now, January coming up, you're going to use it quite a bit for all your QuickBooks Online clients. Now, that's only for QuickBooks Online clients, right? So if you have QuickBooks Desktop clients, you would have to use the tool that's already in QuickBooks Desktop called Client Data Review, and it has something very similar. Now, I want to talk to you about some other tax tips that I have. And this is kind of like the things that I do, best practices within my practice. So the first one is keep all the financial statements in accrual basis. Like I know that QuickBooks can do cash basis reports, but but typically cash basis reports in QuickBooks act a little strange or don't convert correctly. If you actually search in YouTube previous episode like QB Power Hour, I talk about how the cash and accrual conversion works, and I go kind of in depth about what we like to call the cash basis balance sheet and some of the weird ways that it reports to accounts payable or accounts receivable. So check that out for more details about that. But my tip here is keep all your financial statements always in accrual. And then whenever you're going to do a year-end adjustment for taxes or whatever, go ahead and make one big journal entry that adjusts all the accounts receivable and sales tax against sales, and then adjust all the accounts payable and inventory against cost of goods sold. Now that's also very important. That's assuming that all of accounts payable is related to inventory. If it's not, then it's not going to be as simple as this. But that's how I suggest keep it in accrual. Do a AR and sales tax adjustment to sales, and then do a accounts payable and inventory to cost of goods sold. Now, some companies obviously cannot report in cash basis because of the size and the size of their assets and inventory and that sort of thing. This is only for the smaller ones that you want to report as cash basis. Now, the second tip is for partnerships, typically LLCs, right? And S Corps. Officers' health insurance, contributions to charity, those two are not an expense on the corporate return. They're an expense on the personal return. So I typically recommend to create an other expense account under the other category called officers' health insurance or contributions to charity. That way we can train our clients that when they look at the profit and loss, they're not looking at the net income under other, they're looking at the net income above other. That way they know what's actually going to be reported on the tax return. And the other two items may or may not be deductible based on, whatever personal tax rules are out there. And those things are deductible only under the personal. So also to avoid any other confusion under the other side, I make sure that interest income, contrary to most people's suggestions, interest income, make it a regular income account instead of another income account. That way the other category is strictly for those things that are deductible in a different way. So this is just my tips related to tax preparation, financial statement presentation in QuickBooks. The other tip here I want to say is officers' gross salary and guarantee payments. I recommend those are in a different category than payroll expenses because those are typically going to be added back into the owner's personal tax return as income. So sometimes when they look at the net income and the net income, it's a net of guaranteed payments, which is sort of like salary for partnerships, and officers' gross salary. Again, they're looking at the wrong number in terms of determining how much tax they're going to pay. So I recommend that you keep them in separate lines. Don't put those under other category. Just leave them in separate lines and just make sure you train the user to look at those two things and know that those things have to be added back for their personal taxes. Now, I also recommend to create an equity account called non-deductible expenses. And typically you can just make that a sub-account of distribution or draw. And that's good to use for adjusting for personal travel, adjusting for the 50% meals and entertainment that is not deductible that you can do at the end of the year, any personal use of vehicle, any personal expenses. Basically, just put it in there and make sure that the user can see it in the equity portion. That way, it's an easy way to reconcile your M2. And if you prepare taxes, you know what M2 is. If you don't, then obviously that's Chinese, but it has to do with the way we square up the balance sheet in the tax return. They also recommend creating an equity account called personal tax payments and also make that a sub account of distribution, remember draw, because a lot of times people pay the IRS and they put it as an expense account of some sort, and it affects their net income and it affects how they see taxable income. So I recommend that you train the user that if you're going to pay the IRS for personal taxes or maybe back pay or estimated taxes, make sure that they put it under that account so it reflects on their equity and it doesn't affect the net income incorrectly. Now, I also suggest that you separate payroll taxes and payroll processing fees. Now, very often I go to QuickBooks files and there's a one big payroll expense account, and under it, as a sub account, there's payroll taxes and processing fees. I recommend you break those out because I like to see payroll expenses match the W-3, or which is basically the accumulation of the W-2s. I like to match it 100%. Plus, if you don't prepare taxes yourself and you do and you prepare a financial statement for a tax preparer, and the tax preparer see right away that the payroll expense matches a W-3, that gives you a couple of notches of credibility right away. So it just, at least it makes it look like you're thinking about tax preparation when you do the financial statements. Now, C corporations or C corps recommend an other expense account for federal income taxes and state income taxes and local income taxes. So basically, some of these taxes are deductible on the corporate side. Some of the taxes are deductible on the state and local side. So those are a little bit strange. So I would just leave them under an other category for C corps, because that'll make it a lot easier to read and understand. The other thing is I recommend that you create another expense account. This is for all companies, called S corp, C corp, LLC, whatever. Section 179 depreciation expenses, because whenever a tax preparer does a Section 179, which basically depreciates 100% of an asset purchased during the year, those are a little bit difficult to reconcile against the M1, which is basically an area on the tax return where we actually explain the differences between book and taxes. And Section 179 is deductible for taxes, but it's not on the balance sheet typically as a full deduction. So I recommend you separate it in other expenses, again, to make it easier to reconcile with the tax return. And finally, don't forget to take all the tax return adjustments and put it back into QuickBooks. So then go back and pull the tax return, whether it's you who did the taxes or a third party, pull the tax return, pull Schedule L, and make sure that balance sheet matches with QuickBooks 100%. There's nothing more frustrating than going the next year to file a return and none of the balance sheet beginning balances work. It completely takes away any credibility from those financial statements. So don't forget to add those adjustments at the end of the year. So I'm going to hand it over to our guest speaker, Christopher Ragain. He's a CPA tax preparer, managing director of Ragain Financial Inc. He's a founder and CEO of Tax Planner Pro, which is a software that he used to use for himself, and now he made it commercially available for all the accountants. And it's going to be, I think this year is going to be very influential for a lot of us that you do tax planning year end. And his specialty is year-long tax planning. So I think he's a wealth of knowledge and he's got a lot to teach us. So take it away, Chris.
I wanted to start today by talking about an actor, Will Rogers, and a quote that he made that I sometimes like to think about when I think about taxes, and that is, the income tax has made liars out of more Americans than golf. And the point I'm trying to make with this is, we need to try and make sure as practitioners that we are telling clients how to do things the right way and not lie about taxes, because they want to lie because they're paying so much. We need to show them how to pay very little, but the legal way, and that's where tax planning really comes into play. And we're going to go over some tips now that I think will kind of add into that, some fun tips. I call them the obscure tax tips, and then we've got some must-know ones. So in this first obscure tax tip, this is called the 14-day rental strategy. And if you have ever had rental properties or ever rented your home out before, you may know that if you rent your personal residence for less than 15 days, you don't have to report any of the rental income on your tax return. And so a way to convert this into a business idea, and this is a little strange, that's why I call them obscure, is if you had someone who wasn't family, let's say a neighbor that also owned a business, you go and rent their house for 14 days, business-wise. Maybe you're throwing parties, maybe you're having a business meeting of some kind, which would be the best way to do it. And then they rent out your home for 14 days or less. You both get a deduction for having paid the rent, but at the same time, you don't have to pick it up as income. So this is kind of a fun way to do it. At the end of the day, it's not about how we necessarily uh, are trying to avoid tax, but we're trying to find clever ways to beat the system. And this is the next one. Obscure tax tip number 2 is the defined benefit plan. Now, these can be really complicated. You need an actuary, but man, are the benefits massive. The benefits are huge because if you are making $300,000, $400,000, $500,000, you can set up a pension plan, and that actuary comes in and says, "Hey, look, if you want 100 grand every year in retirement, you need to fund this plan 300 grand over the next few years. That 300 grand that your business pays to your own retirement, totally deductible. I mean, it's great. It's one of the best high net worth, high income strategies that there are. It's completely above board. You got to hire some folks to help you do it. I mean, and there are some fees involved in all of this, so it is a little expensive, but the benefits are there if you can put away 200 or 300 grand at a time. Now, this next one is a brutal one. Obscure tax tip number 3 is a wild one. The IRS has their eyes on it a little bit, but there's not much they can do about it. And if you don't like aggressive tax planning, put your hands over your ears, because obscure tax tip number 3 is captive insurance. And captive insurance is all about IRC code 831B. And what it says is this, that an insurance company with less than 1.2 million in premiums can basically not pay tax on any of that. And they do have to pay some some tax on their investment income. So imagine if you're a small insurance company that does less than $1.2 million, you don't have to pay income tax on that income. Now, here's where this strategy comes into play.
And I'll add a little bit of commentary if you don't mind. So if you, this is not just for insurance companies only. These are for small businesses or a small business client that makes enough money that they can sort of self-fund and set up an insurance company. That's what you're saying, right?
That's right. So they can
set up
an
insurance company.
Yeah.
Exactly. You can set up an insurance company. You have to go through all the regulations, and you can pay yourself insurance premiums up to $1.2 million, and that secondary company will actually pay out will pay the claims back if there's actually any claims. So this other company actually acts like an legally speaking and regulatory speaking, it's an insurance company. So I would clarify that, because not as simple as you make it sound.
Well, and I mean, this is a complicated strategy. So you're going to pay some folks some money, but if you're trying to figure out a $1.2 million deduction, it's always going to be that way. And what happens is let's say I own my firm, my accounting firm, Ragain Financial, and I'm making $3 million a year, and I decide to do this. I set up an insurance company that I also own that I pay premiums to from Ragain Financial. Those premiums are deductible to me. However, when they go into the insurance company, they're not taxable. And they're insuring me for crazy terrorism or flood or meteor showers, things like that. I know it sounds crazy, but I'm telling you, medium and small businesses do this all day long. When that money is in the C corporation then and hasn't been taxed, later you get to pull it back out as a dividend, like a profit. And what do we know about dividend tax rates? They're much lower than ordinary income tax rates at the highest bracket. So it's a complicated strategy. It's one that the IRS is eyeballing pretty good because they don't like it. There's not much they can do about it, but they don't like it. But right now, it is legitimate. And if you have clients that need to get $1 million, $2 million, $3 million of income out there, I only have a couple of these guys. But if you've got them, boy, their eyes get wide and they say, how did you know this? You become that hero to them, and maybe they can implement something like this. Let's talk about some tax tips that are more reasonable. And this is must-know tax tip number 1, and simplified home office deduction. A couple of years ago, they implemented this. This is $5 a square foot that you can show as kind of like a safe harbor almost up to 300 square feet of home that a client uses as business. Something else that's cool about it, you can still take all the Schedule A items, so you don't have to reduce it. You reduce like your mortgage interest, that kind of thing for the home office deduction. You get to still claim 100% of the Schedule A items. You don't have to do any depreciation recapture. So if your clients are claiming home office, take a good look at this one, because this is a really easy way. It's not going to be audited. I mean, I shouldn't say that, right? You still need to be using your house as or for business reasons. So it's not just a free that everybody can take. But if you're using a part of your home for business, take this, or at least take a good look at it. You can't do any carryovers if you have a big deduction, but other than that, it doesn't have a lot of drawbacks.
And quick question about the mechanism of this. So if you have a Schedule C client with a 1099 income or something like that, this would be on the Schedule C. So you don't need to have any receipts. You don't have anything to prove that you've actually paid any money for that. You just have to have dedicated home office space. But
That's right.
when it's an
The
LLC,
only examination would be the space.
Correct.
So, yeah.
I recommend my clients to take pictures of their offices with a timestamp every year and email them to me. That way I can have a record. Yeah. So it's got a timestamp. Exactly. Absolutely.
Yes.
Because audits are in arrears. So you always go back and audit 3 or 4 years. You may have moved or whatever. How are you going to prove that you had a home office, right?
Absolutely. It's the best way to do it. And I've actually been in an audit of a home office deduction, a big one. And the pictures are the only thing that saved us. That was it. He had receipts and everything else didn't matter. It's the pictures that won that audit.
I'm going to move it to the next tax tip, the employing your children.
So must know tax tip number 2 is about employing your children. Now, this is one that if you are not recommending this and using this, if you have clients or yourself have children over the age of 7 and they do any work at all for your business, you need to be taking advantage of this. You can pay your kids as an employee up to $6,300, and the standard deduction on their tax return is going to zero out their income at the end of the year. So they don't pay any tax. So the rule is you can pay your kids up to $6,300 each, and they're not going to pay any tax, but you get to take the tax deduction for it through your business. So it's a freebie. It's a giveaway. It's one of the simplest tips to employ. Now, make sure you pay the kids through the payroll. You get the business tax deduction, but the kids pay no tax. And Schedule C, sole proprietors and partnerships, you don't even have to pay payroll tax when you pay the kids. That kind of goes back to an old rule for farms and that kind of stuff. But S corporations, if you have an S corporation, you'll have to pay the payroll tax. But if your tax rate through your S corp is at 30%, when it comes through to your personal tax return, and you're paying 15% on payroll taxes, this still works. This is still a good deal. Plus, you can really turbocharge this. Here's how: have your kids get paid $11,300 and contribute $5,000 to a traditional IRA. Or maybe you've got a SEP IRA in the business, or maybe you've got a 401k even in the business. Now you can pay your kids massive amounts of money. They still don't pay any tax on their tax return, and you get to take a deduction for the whole bit. It's a great tip and a great implementation. If you just offer it to your clients, they'll gobble it up, I promise.
Hey, Chris, can I ask you a question? Maybe you ran into this. Is it true that if you have a 401k or a IRA, I'll probably say maybe IRA, when you go to college, can you take a portion of that to pay for college, or is that not allowed without?
Definitely on the IRA. So higher education expenses are eligible. I think up to $10,000. I'd have to go back and look at my tax, my quick finder to know exactly.
So we're talking about a extremely aggressive way to do at least $10,000 of your college planning by paying the children, putting money on the IRA. When obviously $10,000 won't get you very far, especially 15 years from now. But
let's talk about what you do with the money, right? Because most of my business owners, when I first pitch this to them, they say, I can't pay I've got 3 kids. I can't pay them $18,000. I can't afford that. Well, here's what you do. The kids are the ones going out and buying the groceries now. There's nothing that says that you can't have them spend that money on household expenses just like you would have. So they get the money. You have them go out and buy with you the groceries or even the utility bill. And you're going to teach them a lot about money. You're going to teach them a lot about the value of a dollar. and you're going to enjoy all of the tax benefits of having kids, because there's not enough. There's not enough tax benefits to having kids necessarily. So employ this one. It is a no-brainer.
You think a 7-year-old looking at a paycheck that knows math, like my daughter's 7, she looks like the gross and then the net. You think this person will have affinity towards taxes as they grow?
Yes, and any of these kids that are doing this for most of their formative years, we want to give them a business card here at Ragain Financial, because we'll be looking to employ them later on.
Absolutely. One of the things I ask, this is what I ask my clients. I say, hey, do you give your kids any allowance, to go to the movies or whatever? And they say, yeah, of course. They suck the life out of me, or whatever the standard comment is. They say, well, you know what? Have them go to the office once a week and sort some paperwork or whatever, and pay them. Make sure that they work, right? Don't just.
Sure. Well, of course,
We're not
they really
teaching anybody tax avoidance here. Make sure they work and they understand that. Get them involved with the business early on. You have tax planning reasonings to do that, and then your children feel like they earn the money, so they may be actually even better. And instead of buying crap, they'll buy maybe more useful stuff. I mean, I don't know. I'm just thinking.
Yeah, and there's still child labor laws that you gotta, they're your kids. You'll make sure that they're working in a safe environment, that kind of thing. But boy, when my daughter turns 7, you better believe we're gonna have her in here doing a few things. That's probably gonna be cleaning. That's the first thing I had to do at my first job, and it taught me a lot.
I don't think I'll ever have I don't think my 7-year-old will ever clean anything.
Mine's gonna. I say that she runs the household, so who knows if I'm right or wrong.
All right. So you want to just wrap it up for the recording? Go ahead, Brett. Just wrap it up.
Yeah. So I mean, at the end of the day, I want everyone to understand a lot more about tax planning, about the value that you can provide with it inside your firms and with your clients. Bookkeepers, tax preparers, clients, they should all coalesce around this tax planning idea, and we're going to talk a lot about that here in these next in these next slides.
But go ahead, demo the software, please, because I'm really excited about that.
You got it. I'm passionate about tax planning, and so we can talk about it forever. But the tool that I've been using internally that I've now offered to the public is something called Tax Planner Pro. And it's on the Intuit App Store, so it connects to QBO and does a lot of neat things. This is the summary screen for Tax Planner Pro, and what it's doing is it's pulling the financial data from QuickBooks Online and creating a tax projection for both the business and the individual owners. And so not only is it showing me all year long what my taxable income is probably going to be and what my tax due is going to be at the end of the year, and there's a lot of complicated calculations that are going on in the background of this. It's pulling the information, then it's annualizing it. If you want to see that data, we've got edit buttons next to each of these, and you can dive in there and see it. But this is probably the screen that my clients use the most, because they're constantly wanting to know, where am I at? Where am I at? And it's the reason I want you to think about, what does this mean for my practice? What can we do with this in my practice?
And this is real time, right, Chris? It is
real time. So every week it's updating. Now you can actually set it to where in these sync settings where it'll run each week, each month, or each quarter, depending on when the bookkeeping is being reconciled and done. But you can set whatever the sync cycle is, and this is real time. So whenever it comes the end of the year and my clients are ready to do tax planning, I've got the tax projections already done. Now we've taken it a step further. We've taken it a step further because we have the planning module and the simulator. Let me show you both quickly. The planning module is where I've taken some of our best tips and I have calculated with the software what this particular client could do. So right now the current tax projection is that this person's going to owe $101,000 on their taxes this year. However, here is 7 different tips and the amount they can actually save. So with income deferment, they can save $61,000. Expense acceleration, $38,000. SEP IRA, $15,000. Children employment, $2,300. Section 179, $92.90. I've got even more of these in the background that you're not seeing, that if you decide, hey, I don't want to use this one, another one populates. So we're covering the planning idea for you. You don't have to come up with the planning ideas on your own if you're the accountant offering this. You don't have to come up with the planning ideas. But here's another thing. Let's go over to the simulator. I did this specifically just for me. Now I have a way where I can run what if scenarios. So let's say that I'm wanting to go into retirement planning, and this individual says, I'd like to put in $25,000 to a SEP IRA. Okay, let me put in $25,000 and watch what happens. It updates what the tax amount is now with that deduction in there. You can do all kinds of different what if scenarios. You get to see a summary of not only the income and the deduction amounts. And this is what you pull up when the client says, what can we do about this tax bill, Chris? Well, let's go to the simulator and figure it out. Now, not only do we have the sync settings here that you can set in the profile pieces, but we also have, and Hector, I'm going to jump over to the accountants piece now. We also have
go ahead.
Our new accountant portal that's coming out. And the accountant portal is made just for you so that you can manage all your clients on Tax Planner Pro, see all of their screens, all of these screens here, and set them all up, not only if they're connected to QBO, but look at this. We've got a brand new functionality coming up here in just about a week. It is the data entry piece where you don't have to have QuickBooks Online to use it. All I need is the income and expense amount from the business, and you're off and running. Everything that we do inside Tax Planner Pro can be calculated and projected based on that. It is a great opportunity, and we don't have enough time here to talk about all the ways you can monetize this, but I have something I want to show you, and this page is at taxplannerpro.com/accountants and is also in the slides. This is the Tax Planning Mastery course, and when you sign up for the accountants portal, you get this course. It's a 25 video course. It's about 14 hours of content that shows you how to do tax planning from start to finish. And not only shows you how to do tax planning, even if you're a bookkeeper, and I have a whole section of it for bookkeepers who want to do tax planning. But even if you've never done it before, not only how to do tax projections, but how to make money from it. I have a slide here. These are the packages at Ragain Financial, my accounting firm. I have 3 different ones, the basic, the pro, and the elite, and we price them based on revenue. If you want to go to ReaganFinancial.com and see what's in each of them, absolutely go do it. One of the things I want to point out to everyone, the only difference between the pro package here and the elite package here is tax planning. It's tax planning. Look at how much more I make. I make at least $100 a month more on almost all of them. You know how many of my clients sign up for this package? About 85%. What's that tell us? People are willing to pay for tax planning. Don't give it away for free. When they walk into your office and say, what should I do about this? Don't sit there and scratch your head and go, well, let me spit out a couple of things to you. Don't do that. Instead, get a software that can help you put it all together. Obviously, I have one here for you. And start selling this because they'll pay for it. Hector, one of the things I want to do someday is I want to run an experiment at my firm where I'm offering tax returns for $400 and free tax planning, or free tax planning for $800 and free tax returns. And I want to see what they do. Because I actually think that I am able to sell at a higher price point when I talk all day about tax planning than when I talk all day about tax returns. Because it's too easy to go compare my prices to H&R Block or somebody else that's also doing this stuff. It's too easy to compare us like a commodity. You can't compare us like a commodity in tax planning. I think it's extremely profitable, and I'm proving it with our firm. I show you in that course how to set this thing up from beginning to end. So, and here's the best part, it's free. It's part of the package. So we're talking about in Tax Planner Pro, it's free as part of your signing up to the software. So we've got retail users. This is what's on apps.com here. We've got the free version, so you can always check it out. It does a business tax projection. It's free forever. We've got $2 a month and $9 a month for, this is for each individual business. Here's where it gets interesting for you. Let's say you've got 10 clients, $39 a month, you get all 10. Plus, you get the tax planning mastery course included for free. Even better though, the unlimited package, $99 a month, you get unlimited clients, the course, plus after the course, I give you a test and you can now use the registered tax planner designation and credential. And there's a special support for the unlimited users. There's a lot of added benefits that we're going to offer as part of the unlimited package. These aren't available yet, and so you need to come to our website here. This is at taxplannerpro.com/accountants and sign up right here. And you will be the first to know when we launch. And we've got a lot of special things for this group that signs up early, a lot of special things that we can show you and talk to you about once you sign up. So with that, Hector, I know we're probably kind of running out of time a little bit. And
Okay. Yeah. So so that's good, Chris. I do have a lot of questions for you. Some people are asking, what tax software do you use? You're willing to share
well,
that?
Sure. I mean, I use Drake, and I've used Drake for a long time. But I'll tell you, as somebody who runs hundreds of client tax returns, we only serve business owners here, so every return is significant time. We've got to find a better solution, and Intuit Tax Online may be that. I'm going to put it through its paces, and I will write extensively about it. I'm going to probably run 50 to 100 clients, hard clients, through it and see if it can handle it.
Plus, Intuit Tax Online, for people that have QuickBooks Online Accountant, I believe is the first 2 returns, or the first 5 are free. So
the first 2 business tax returns and the first 5 individual tax returns, I think, are free.
Okay. And then somebody else is asking about, because you said, when this comes out, and I think you want a clarification that the app is out. Its app is ready, is at apps.com. You can sign up by just clicking on apps in QBO and adding it. There's a free version forever, which allows you to view the whole thing and use it. You just can't do the combined personal and business planning, which is obviously that's a lot more intricate. So obviously you're going to charge for that. And it looks like you're charging $2, so it doesn't seem
$2
to be.
a month.
Yeah, I know. It's almost a service.
I don't know about you guys.
You gotta charge
I'm not
something.
going to make software that's more expensive than QBO. I'm just not doing it. So this will always be affordable.
Exactly. That's a good point. And then the stuff that you said that it's coming out, it's the accountant portal. And the accountant portal.
That's right. The accountant portal, where you can manage all your clients from the same place. We think we're going to release that in the next 10 days.
Okay. So there's people asking about that tax mastery course, because they're very excited about that. Is that out? Is the tax mastery course out?
It is not. So I have the first video on our Vimeo site, and I don't know if you're still showing my screen or not, but we have on Vimeo and on YouTube, if you search for Tax Planner Pro, I have the first introduction video that takes you through everything that's going to be in that. And there's some really exciting content, at least I think it'll be exciting, because I show you how I go to market and build my practice. In this intro video, I show you exactly what my firm makes, what I net from my firm. And then I take that further and say, I'm going to show you how to almost replicate my firm from scratch.
I do want to talk about some additional resources. So if you don't mind, can you just go to your blog and kind of show us, you just started this blog. This is brand new. And
yeah, hold on. Let me just downsize this, and I'll pull that up.
And for the sake of disclosure, this blog just started, and Chris and I have agreed to mutually collaborate with each other. So Chris is going to be writing in my blog a little bit of tax stuff, and I'll be writing on his blog a little bit of QuickBooks stuff. So I think we'll have some collaboration there. So go ahead and show us the kind of, this is all free, right? You're not paying anything.
This is all free. This is at blog.taxplannerpro.com, and what I have here is quite a bit of content that is what I think is hard-hitting / really interesting, hopefully, topics from an accountant's point of view, almost the same way that Hector writes. So think of what we're going to try and do here on our site as some of the tax kind of things, as opposed to what Hector does with a lot of the QuickBooks information that he has. And his blog is considerably more robust than ours is or probably ever will be. But we're going to try and emulate what he's done and really make it about a lot of tax issues and tax ideas and marketing and other things that we think will be interesting to you. And so you can come here and read some of these articles and find out more about some of the things. Like one of the articles is why barbecue grills raise your tax bill.
That
So,
should be interesting.
that's a teaser, right?
Let's go.
How the IRS stole my honeymoon. So there's things here that maybe are interesting, and we're gonna fill it up with great content.
Okay. And what other resources you have available for us? The free resources are out there. What else do you recommend?
Sure. So our Vimeo page at Tax Planner Pro is really we've put a lot into it, and we have the identical information over at YouTube as well. But we've gone through here and put together a lot of tutorials. Here is the intro to the tax planning mastery class. So you can watch that here. And we've got quite a bit of content from a video perspective because I don't know about you guys, I kind of like watching video. And I don't mind shooting video whenever I'm trying to show you something. We've even got some tutorials about QuickBooks Online, some things that I run into as a practitioner that I thought clients and other folks might find helpful.
Yeah.
And besides on Vimeo, we're going to open up our QuickBooks or our Facebook group that's all about tax planning as soon as the accountant's portal launches. So keep your eye out for that because we're going to have a Facebook group that you can be a part of, and it's going to be all about tax planning and taxes and things related to that. And I'll be on there answering questions and showing you what I know about things.
Yeah, it looks like you love tax, right?
I do. I think I love tax planning. I probably would be all right if I don't have to do many more tax returns. But there's something about tax planning that's exciting, and that comes from the clients. The clients like this part of it. If you want to see a client pull out his wallet or his credit card, his or her, talk about tax planning.
Yeah, and you told me, Chris, you told me that this tool, when it was not available for the public, you developed it for yourself, and you used it with your clients, or it got to a point where you said, "Wow, I think I got something here." So you never really intended this to be a tool for everybody else. This was your tool for tax planning.
Anytime for the last 9 years, I've been using spreadsheets, and so I wanted to make something that would sync with QBO because I was moving that direction in my practice.
Yeah, that makes sense.
And so I built this, and I kind of thought, yeah, this is great. I think this is going to work well for my clients. I didn't intend on trying to be a software developer necessarily, but then as I started seeing what the clients thought about it, if you know that my clients no longer log into my portal, they don't. They now are saying we need the tax returns on this because this is what I log into.
Oh, that's interesting.
They don't log into QBO. They don't look at the financial statements. We have emails inside Tax Planner Pro that will send clients each month a summary report of their income and expense, like their business, what you'd send them as a financial statement, plus we have a little bit about their tax returns and what their tax projection's showing. They look at that and they come to Tax Planner Pro now, and they don't use any of our other tools. I literally shut down ProHub 360, which was my portal, because they now use this.
So with the accountant portal, you're saying we can upload our clients' tax returns there, so our clients can see their tax returns. So if you use Tax Planner,
that's what we're going to build. So probably before the end of tax season, we're going to have another section of this where it's going to be the tax returns and other documents you want on here.
Sure.
And you can upload it. What my thought is, what we think we're going to do is we're going to create a PDF printer that you can put on your machine and then just print the tax return to your client's Tax Planner Pro portal.
Right. You know what I would suggest. I mean, obviously this is not a venue for product suggestion, but since you're making this product better and better, one of the common things that we get is our clients call us and say, "Oh, my banker wants the financial statements. Oh, whoever wants the financial statements." It would be cool to just go to a place where you can add an email of somebody that can get it, and it's some sort of secure way. That way, I don't have to sit there and password protect the tax return and email it to someone, and just kind of
Yes.
Kind of make
It's a
it
huge problem I have, right? I
exactly
probably get 30 or 40 of those calls a year, right?
all day long. Yeah, all
And
day long.
yeah, it's constantly, it's a great idea. And as we build it, we should be thinking about those kind of things. And there's, portals and document storage is a much bigger topic than necessarily I know how to tackle. But I know what my clients are asking for, and so that's what I'm going to build.
And there's another question
And
here from the crowd. If you have a client that owns multiple companies, so they own multiple businesses, and maybe they're half owner of one and full owner of
yes,
another one, do you have the ability to sync multiple QBO accounts or
we're
not yet?
going to. So that's a huge issue that I have. So
Yes.
this is why it'll get built, because I have several clients, probably half, that own more than one business. I don't have the capability in there right now, but by the end of tax season, it will be in there, because I've got to be able to sync 3 or 4 of these things,
Right.
one person.
Right. Correct.
And we have a much bigger accountants portal planned, but this first portal is a way that you can get started with it. You can use it so that you can, one of the things about tax planning, it's almost tax season, right? And so you may be thinking, well, tax planning time's probably over and tax season's coming. Maybe I'll take a look at this next year. Don't do that for a couple reasons. One, we have some really exciting stuff for those that sign up now. And two, when people are in your office and you're doing tax returns with them, you need to be showing them these plans if they're upset.
Right.
Right? You need to be running a plan, showing them what things they can do at least next year to calm them down and provide them that value. You need to be setting them up on Tax Planner Pro for this year. Now's the time to do it. So it's an important thing for tax season. I use this as much during tax season as I do during tax planning time. Easy, easy.
No, that's great. I mean, I find that if the client looks at sort of the results that you have there before they come meet you for taxes, they may have much better questions, right? I mean, I'm just kind of thinking about.
Well, and one of the things that this spurs is this idea of what is the value of tax services? And I always go back to bookkeepers too, because bookkeepers are more critical to the tax planning system than anybody understands. Because without good data over here, this all breaks down.
Absolutely.
I think bookkeepers need to be offering this service, and here's where I'm a little radical. I think bookkeepers need to be offering this service, because there's a number of different ways that it maybe isn't getting done. Maybe the tax preparer is too busy. Maybe the tax preparer doesn't want to do it. Maybe you can team up with them. But think about it. The bookkeeper is in charge of the books. So if we're going to set up a system that needs the books and the tax piece, they're integral to it. And in many cases, they need to be the ones kicking it off. And there's such a big revenue opportunity in this. The idea that you can charge $100 more a month, $1,200 a year to tax plan someone and they'll pay it, I'm proof. They pay it.
Agreed. Yeah, absolutely.
All day long.
All right, so let's wrap this up, Chris, because we're kind of going over time. One thing, can you show that slide where you had the anatomy of tax planning? I thought that was kind of an interesting slide. I think that you haven't covered that one. So could you cover that one real quick? And then, so before you do that, when Chris is saying sign up now, he's not asking you to buy anything. Just go to the taxplannerpro.com/accountants, sign up for the accounting portal. That way, as soon as it comes out, you sort of get first look at it. And also, start trying it, the light version, the free version. Connect any of your clients' QBO account or your own. Get a feel for it. Nothing's being sold to you at the moment, right? When Tax Planner Pro,
that's right.
Tax Planner Pro
sign up
that will be then. But right now, just sign up. Exactly.
Yeah, it's just for information. Let me put a little cherry with this, because we talked about this a little bit before the event. There's going to be something very special about this software as it relates to the people who use it, the accountants that use it, and how we're going to structure the ownership of this company. So I can't tell you more. I can't tell you more until this spring unless you sign up. So I need you to sign up and let me explain what we have planned with this software. It's really exciting. It's never been done before. But with that teaser a little bit, let me come back over here and talk some facts. This is the slide I made of the anatomy of a tax projection. And the point I'm trying to make here is that bookkeepers are more critical than you think. And here's why. Because these different components, some are very fluid and some are not. And the pieces that are fluid, like business income, business expense, owner payroll, is all in the charge of the bookkeeper. So this is the hard part of doing tax planning. If you look at the rest of a tax plan, which is maybe spouse wages or dividend interest and capital gains or the itemized deductions, you know what we do in most tax projections? We use the prior year information off the tax return. So that's not something that requires a lot of tax knowledge or understanding. You're literally looking at last year's tax return, which as a bookkeeper, you can get a copy of that, and you're just inputting what was in there last year. I know it could change, but normally it doesn't. The big pieces that change are right here. So I can't stress it enough. The second video of my tax planning mastery course, the second video is a video called I Don't Do Taxes, and why should I watch this? And I go through it step by step of why bookkeepers need to be in this business.
And by the way,
this is
also,
kind of wise because
I
they're
want
so
to make
critical
sure
to it.
we because I'm a CPA, and many CPAs would be in uproars with what you're saying. Let's clarify something. You're not asking non-tax practitioners to prepare your tax returns. You're asking
No, heavens
bookkeepers
no.
and accountants to give your clients the tool to enable
Yes,
these conversations with their current tax professional that is
that's right.
probably does not have the time to sit down with their client quarterly or monthly, or to actually
That's right.
plug these things in the tax software to provide a good tax projection. Okay,
That's right.
you're not trying to, get yourself out of a job because you're a CPA tax preparer. You're trying to,
No, and no one,
right.
yeah, no one's crazy enough to say, well, I'll start doing tax returns, and I'm sure the CPA or the accountant won't get mad at me. That's crazy, right? That's not what I mean. Tax planning and return preparation are two different animals. And if you enjoy bookkeeping, there's no need to get into tax return preparation. But tax planning is the synthesis of the bookkeeper and the tax preparer. And in most cases with tax planning, the driver of how that process starts needs to be the bookkeeper, because they are the keeper of the information that will be required to set all this up. The QBO file, setting up the app, and then you bring the accountant or the tax preparer, and you bring the client to the campfire. And we talk about that in my course, that here's how you bring the tax accountant and the bookkeeper and the client all together to coalesce around tax planning. It's the one thing everyone has in common. Think about the decisions that a bookkeeper makes that affects the tax return, right? The bookkeeper makes a decision about how to classify something.
Okay, all
No
right.
one's micromanaging that quite like the bookkeeper does. Those decisions affect the tax return, whether they're in tax return preparation or not. There's no better reason to have everybody kind of come together on it.
Perfect, Chris. Hey, Chris, I really appreciate it. I think you did an awesome job. I am going to send you an email with the slides, with all this information, with the resources, with the sign up link. And at the very least, go to apps.com, get the free one, get a feel for it. And Chris, stay on the line because I got to talk to you about something real quick. All right, so next episode, mark your calendars, QB Power Hour next Thursday. This is 1 week from now, next Thursday, top 10 apps of 2015. And Michelle and I are going to kind of explain to you why and how we came up with those 10 apps and why we chose them. And Tax Planner Pro kind of came in late on the nomination. So unfortunately, Chris, you didn't go to the democratic process near enough. So, but I think it could have won, and probably next year will win because it's an awesome app. And
it's a top 11, I think. No, it's a top 11.
It's 11, right? It's 11, right? So the next official episode after the 17th, we'll have a whole month of holiday break. It will be payroll topics on January 14th. Also very excited about that. And QuickBooks at year end on the 28th and so forth. We'll go back to the schedule every 2 weeks. Now between next week's episode and January 14th, I'm probably going to do a bonus episode. I don't know what is it all about. I'm just giving it open for me because I don't know if I can go a whole month. Like I just went the whole month without doing that because the last one we did almost a month ago, and I almost went crazy. Like I'm almost addicted to doing these things because I like teaching and learning and all that stuff. So Thank you very much. Join the LinkedIn group, join the Facebook group, continue the conversation. And I really appreciate everybody that stayed on the overtime. And I'll see you next week. Don't miss next week's episode.